Get another check on Palantir. Q1 numbers are out moments ago. Stock bouncing around in overtime here. It is just higher by a fraction of a percent. The company giving strong full-year guidance. CEO Alex Karp saying in the release its U.S. business had its highest ever year-over-year growth. Joining us now is D.A. Davidson, head of technology research, Gil Luria. He's got a neutral rating on Palantir. Gil, great to have you with us. What's your take on the numbers?
It's remarkable. We're running out of superlatives for Palantir. They just grew 85% at 60% operating margins at scale, at a $7 billion run rate. Nobody can do that. There are no other companies that are growing at these rates, at this level of profitability, for mostly recurring revenue. So it's a universe of one. They're doing phenomenally well. Expectations are high because they keep raising them, which is probably why you're not seeing a lot of reaction in the stock. But the results themselves, they keep getting better every quarter.
I mean, I don't know, the expectations, like meaning the estimate, the expectation in terms of the pricing of the stock didn't seem to be anticipating a lot going into the numbers. I'm just wondering why you think if these numbers are truly extraordinary, why there isn't much of a bounce in the stock when it's not like it's been a high flyer into earnings.
Yeah, that's the trap they're in right now. Yeah, they were trading. Before they reported this, they were trading at 90 times cash flow. I want to say that by the time we all adjust our numbers, they're trading at more like 80 times cash flow. That's very high expectations. That's a lot more than anything else. And the expectations for the fundamentals are very high because they've been accelerating every revenue for the last couple of years. So they're in this trap that there's nothing they can do to impress investors because every quarter keeps being better and better than the previous quarter before that. But I don't think they care. I think what they care about is the business is doing phenomenally well. The stock over time has performed very well, and they're going to continue to grow this business very rapidly. There's really not a lot of reason to believe this is going to stop anytime soon.
Gil, what do you use in terms of macro factors, industry drivers to model the performance? Where is Palantir getting all of this growth from, whether it's from, competitors or just kind of new functions, or is it just, the free spending by the Defense Department in a time of war?
Yeah, so we thought the commercial business would get bigger than the government business. The reason it's not is that the government business accelerated a lot. So they're almost half and half right now. So it is two completely different things. One is the United States government is increasingly reliant on Palantir for its most critical systems. I think it's very well understood at this point that a lot of the successful targeting that happened, especially at the beginning of the conflict in Iran, was Palantir tools. So they're blowing away everybody's expectations in the Department of War, which means the Department of War is going to rely on Palantir more and more. Local municipalities in the United States will rely on them more and more. That's what's happening on the government side. On the commercial side, they're just having tremendous success supporting those commercial customers, so they keep doubling that business. They're in such good shape, they don't need salespeople to hit enterprises up. They have more inbounds than they can handle. We went to their conference, and what we heard from most of the CFOs we talked to of their customers is they called Palantir, and Palantir's in a position to be selective. So that just tells you the success their customers are having is bringing in other customers. That's a very rare position to be, especially in software these days.